Well, the unemployed, of course, skyrocketed in this pandemic recession. But there's one group in particular that rose and didn't see any of the modest bounce backs, even in between the waves of this pandemic. And that is the self-employed. CIBC's Benjamin Tal with us now for a look at what this might mean. Benjamin, so interesting to see that of those that saw the biggest jump in unemployment, it was the self-employed, and they've stayed there. What does all of this suggest?
Yes, that's very interesting because, you know what, we are short about 300,000 positions, and that's before the third wave. So this number, unfortunately, will rise. But about 50-60% of this decline in employment is basically self-employment, which is huge relative to their size in the economy. And what's interesting, as you mentioned, is that they didn't go down as much as the other segment of the economy did, but they did not rebound in any significant way. It's just one straight line down. We haven't seen any recovery, not between the waves, as you can see from the chart, not during the summer of last year. Something happened there that prevented self-employment from improving in any significant way. The question is why and what does it mean? And one possibility, Amanda, is that some of those self-employed, by the way, most of them are one-person operation, are maybe collecting some CRB money, and maybe, I'm speculating, maybe they are less motivated to return to employment at this point, given the fact that they can collect $2,000 a month.
We could also speculate, of course, that a lot of the self-employed are in service industries that have just been completely wiped out by what's happened. Should we hope and expect, I guess, both of those would be relevant here, that this will snap back once the economy can reopen? Now, I don't think anybody expects a light switch reopening for the economy. Even with vaccine rollout, it'll be probably staged. Will the self-employed be back with us? Because it sounds like a pretty important component.
Yes, but what I'm interested in is why we haven't seen it actually in the summer of last year when services opened up, and we haven't seen it. So I hope that will be the case. That will be wonderful. And I think part of it is definitely what you suggested, that we are seeing a situation in which hospitality and restaurants, hotels, they will see a bounce back also when it comes to self-employment that service them. So I hope that will be the case. But I think there will be a core of self-employment, especially at the low end of the income space there, that will not be motivated to come back to work until the end of the assistance arrives. And I think that's something that we have to take into account, because when we talk about inclusive recovery, we cannot include everybody in the recovery. And the Bank of Canada is talking about keeping interest rates low until we get this fully inclusive recovery. And I'm suggesting maybe it will be a bit more difficult to achieve.
So interesting, and one would hope something that policymakers are keeping in mind about when they withdraw the benefits, if it's going to have this impact on people's decision making. You've also got a chart showing the number of people who are unemployed who were not previously in the labor force, which suggests they're now counting themselves as unemployed, but they may go back to being not in the labor force on the other side of all of this.
Yes, that's very interesting. We have a situation in which when you become unemployed, you have two options. One is you were let go, or you left your job, you were employed, or you were not part of the labor force. As you can see from this chart, a huge increase in the number of people that are now unemployed, that before that were not part of the labor force, they were not even looking for a job, and they now account for more than 50% of the overall increase in unemployment since the beginning of the crisis. So something is happening here, and again, why those people are interested all of a sudden in becoming part of the labor force? Maybe they need so because their spouse lost his or her job and they need to actually participate. That's clearly a possibility. But given the fact that they don't have job experience, means that they will be less employable. Again, reflecting the fact that this recovery might be a little bit more, subdued than otherwise. And that's why talking about an inclusive and complete recovery in the labor market before you remove stimulus is a bit problematic. You cannot, if you are the Bank of Canada, you cannot micromanage the labor market. It's too complicated.
So, and to that point, we know both here and in the U.S., the central banks are watching that employment data so closely. Hopefully they take this on board and look at other information as well, including rising prices, because we could see unemployment stay high, but the labor market start to get tight and sticky at the same time. In other words, the headline number may be masking what's really happening.
Bingo, that's exactly the point. The point is that if you wait for too long, you really play a risky game with inflation. And that's something that we want to avoid. So waiting until you get the last worker in place can be a bit too late. Clearly, you want to help, and clearly we are going to help, and the low interest rates will help the recovery. The opening up will help the recovery. But I think that there is a core element there that will take longer, especially when it comes to self-employment and other groups of the labor market. Don't wait for all of them. It will come, but the cost of doing so will be much more significant due to the risk of rising inflation and being behind the curve. Absolutely.
We certainly heard from the Bank of Canada that things are moving better than they thought. The economy is stronger than they thought. They're rolling up their date at which they might be looking at interest rate moves, and they're tapering their bond purchases. What do you expect to hear on this front? Would you say that's just the beginning of kind of more warnings that we may be tightening sooner than they had said?
Yes, absolutely, and that's the right thing to do. All of a sudden, the Bank of Canada is very bullish, and that's a good thing because you really don't want to give the market the false sense of just relax, don't worry about interest rates, because interest rates will be rising, and the faster you do that, the better, because then you don't have to chase a lagging indicator that is inflation. So I suggest that the recent communication from the Bank of Canada was very constructive. People are starting to think about higher interest rates, and that's actually a very good thing.
And good also, presumably, because it'll help naturally cool the housing market. It's that expectations of rising prices we've been talking about. That's so much trouble.
Yes, I think that the number one thing that will slow down the market is interest rates. You can do all kinds of things at the margin. That will not really change the big picture. The big picture is lack of supply and people taking advantage of extremely low interest rates. In fact, we are borrowing activity from the future because there is this sense of urgency to get into the market. And you see people using all kinds of tricks. The number of people using their house as an income generating tool, basically renting out their basement, has risen dramatically. The number of parents being used as guarantors has risen dramatically. People sense that this is the time to be in the market because interest rates will rise. So we are borrowing activity from the future. And that's one of the reasons why the market is so hot.